Now we'll talk a little bit more about margin accounts. Borrowing money in a margin account is treated like a loan. You put up collateral and pay interest on borrowed funds. Manageable security in your account serves collateral, and interest accrues daily as you post your monthly balance. Basically, the interest accrues for everything that you owe, just like if you were borrowing money from a bank, borrow money on a car, or just interest rates for the basis as commercially recognized interest rates, industry conditions related to the extension of margin credit and general market conditions, interest charged to individual investors depends on their monthly average loan balance, and the rate varies based on the size of the loan. In other words, the bigger the size of the loan, the more average balance you have, the bigger your interest rate. If your borrowed funds, if you pay for the transaction in full by the settlement date, no interest will be charged, just like on a credit card. For current margin interest rates, visit Scottrade, search for margin interest. Basically, that's what it comes down to, is it's how much you pay for what you borrow. And that's your idea of a margin strategy and what margins are about and what they can do for you. But you have to be careful if you don't understand what they are, though. Just like with a credit card or any type of credit. Now, we'll move on to mutual funds and Scottrade. Now, with mutual funds, it can be a good investment vehicle if that's your investment strategy. Now, on Scottrade, you can employ mutual funds by market segment. What does that mean? The market segment is the type of market, or the retail versus the clothing versus, so forth and so on. U.S. mid caps, U.S. large caps, that's U.S. capitalization, how much capital they have, the company. Now they break it down into the type of company, what is fixed income, international equity, and so forth. And then here they show you the averages that they have for the companies between $2 billion and $10 billion, or the small cap between $300 million and $2 billion, or the international equities, and the amount that they have at Scottrade, and how many of them are no loads that don't cost you any money to get involved in, no transaction fees, and so forth. Now some, of course, do. That's how they make their money. Now, if you look at this, and as they say, it's a strategic way to build your portfolio, whether you're looking into diversifying or otherwise. Now, if you walk on more of their investment product at Scottrade, and you go down to the electronically traded exchange-traded funds, electronically traded as most things nowadays, but you have an ETF. It's good for diversification, lower costs, transparency, all sorts of things like that.